So we're going to go over USDJPY today and a couple others real quick. So what do you see on the day? And actually, this is a good point to make. If you look at Forex, okay, on the week, okay, the majority of time, all Forex pairs tend to just range, right? And this goes on and on and on and on and on, right? So we have a peak here, we have a valley here, and over the last 8 years, it's stayed more or less in this range. Okay, so in the last, we'll say 5 or 6 years, it stayed between 174 and 125. Obviously, you can profit massively on small moves because it is Forex and we use margin. Anyways, I don't really worry too much about the structure that it's moving on the day, right? I will get confluences. For instance, if I was to look at the day before I stepped into trade today, I would anticipate that pretty much this is going to flag out and there's a good probability that it's going to drop down. Why? Because we have 2 consecutive very big, decently big bear bars here. Okay, so what I want to do here is I want to look for gaps in the market, right? Where did price take off and where should it come back and fill? So the probable gap that we might encounter on a 1 hour trade is not going to be down here or down here, right? It might be from the open of this candle, right? We might come down to the bottom bodies of this daily candle. We might come down and interact with this, right? And fill that gap before going down. And when you mark it out like that, for me, it looks very probable that this is actually going to push down. Right, and obviously we're on our way. But for the 1 hour trade, this is how I trade. This is how I trade every single morning. I live in New York, so right now I'm going to wake up at 7 a.m. and I'm going to start looking at charts, and I want to trade high volume periods. So pre-market 8 a.m. New York to 11 a.m. New York session. So 8 a.m. what do we have? We have a big bearish candle. Now, the theory behind this, and because I began as a reversion trader, I was always trying to catch these bottoms, and what would it do? It would bounce and then it would push lower, right? So I decided eventually to get on the other side of that. So if we have this big aggressive candle, what we're going to do is we're going to look for a pullback and then a retest of the lows, a break of the lows, and a continuation. So if that happens, what do we need to do? We need to find structure. Where are the highly probable areas that this candle will interact? Let's say we start looking at it and it's right in here. We're going to say, okay, well, it looks like it's going to take these wicks out pretty easy. Right? And after that, where do we have structure? Right? This is a little more difficult because we have closes here and we have closes here and here. So we could say that these areas are a good area to target before we get some kind of rollover and reversal to the upside. So on the 1 hour, I'm going to switch down to the 5 minute, and it usually ends up being a 1 minute trade. So on the 5 minute, all we're going to do is we're going to look for that breakout, and then we're going to anticipate where we might have a pullback. The rule of thumb on these trades is that you have to give it breathing room because the pullbacks can be pretty deep. So what we want to do is we want to always bring out the Fibonacci just to give us an idea. Right? So we have the beginning of the move and the top of the move. And when you see these things starting to fall, what I will always do is I'll just draw a very simple trend line. Say, okay, right now we have a strong directional move to the downside. It's moving into these gaps that we've established. I'm anticipating that in a pullback, it's going to take some time for it to reverse and it'll push back down again. Now on the 1 minute, I do not really find interest buying or selling if it breaks past this 50 area mark. When it does that, it's usually indicating to me that we're going to enter a range. So if it breaks a little past and continues, that's fine. Right? It's kind of based on the structure of the breakout. If there are lots of green candles on the way down, it's been breaking out for an hour, 2 hours, then there are multiple points where we can identify strong structure. Here, there's strong structure. This is a pullback. It should respect this. And maybe up here, there was another pullback. If it doesn't respect that, it'll respect this. And maybe here, and maybe here. But we don't. We only have one pullback. So, it is possible that we get a deeper pullback somewhere. How do we structure our trades so no matter what, we win as much as possible? Well, if it pulls back into this area and then it rejects, cool, we have a trade. But where do we want to put our stop? We want to put our stop up here. And the reason we want to put our stop up here is because the probability that we're going to print a very big breakout candle and then it's just going to immediately rip right back up and go away from us is low. It might though, but if it does come back up here and it starts to fall, we can anticipate that we might be able to add to the position and then get out when it comes back down to here. Okay? But if you have a stop directly above this and then it comes up, and it just splices, and then goes down, right, you're just going to lose because you're getting in and you're putting your stop behind each pivot. So what do? We want to look for a retracement, and we want to find a good entry on the 1 minute. I generally try to stay away from getting in entries like this. Why? Because yes, this is a decent move down. We could have traded this like a flag pattern, but I like them to be somewhat decent, so my risk reward is better. Now what I'm seeing smaller buying stepping back. So buyers are stepping off. It's moving into this little area. So I'm going to look for I'm interested in looking for a trade on this for the attempt on the downside. So on the break of these candles here, I'm going to take a trade. Okay, so now we have a red candle here, and I'm just going to take a short position. So I do every time. Okay, I'm going to put my stop up here, right, and I am going to target a retest of these lows. All right, now I am going to anticipate that it might be a higher low and just reverse. In that case, we want to take profits here. We want to take profits here, and then we also want to have some on to target so we can get out when it comes down here and fills the gap. Okay, so what are we doing here? We're waiting. And what does it do? It comes into this area and we take some profits off. Okay, now we can see that this is also pushed down a fair amount. So we don't need to risk this anymore. We can move our risk up here. So if I was risking 1% up here, well, now I'm risking probably $100 or less on the entire trade. And I can just move my stop to break even. And what does it do? It ends up going up, right. And then it goes down, which is fine because we capitalize on a small percentage of the move. Now, sometimes these things break out. Lately, we've been in a little bit more of a range market, and that's fine. But this ends up being a 3.5 to 1. Now, obviously, when you get into these trades and you have a long stop, the risk reward is skewed, but that doesn't matter because we're only ever risking the same percentage. We're risking 1%. But if we're risking 1% up here and we're getting out down here, that means we might be up $500 when we close out. It's not like we're making $1,500 to risk $1,000. The majority of the time, however, the risk to reward as you enter these trades is by default a good 3 to 1, 5 to 1. So let's move on to the next example. Okay, I don't want to lose you guys too fast. So again, I go to the hour. Where is this shit? And this happens like every day, right? Some pairs, not all the time. Okay, similar situation, right? We have all these wicks, and we have an attempt. Okay, let's go for the 6 a.m. candle to show you what it looks like when you get follow through. Really, really bearish move. We had a really great attempt here, and then it continued, and now it's falling. So it's 6 a.m. looking for a break of these lows, right? But of course, we need a pullback, right? And then let's say over here on the daily or the 4-hour, we have some pretty solid structure, right? And then underneath it, we have some wicks. So we'll just anticipate and say that is where we are expecting price to react. So we're going to go down to, let's just go to 1 minute and cut the shit. It's 6 a.m. today. We have a really nice rundown, right? It's breaking out. It's falling. What do we need to anticipate? A retracement into a key level and then a continuation. All right, so what I always do, again, is I just take this little nifty tool here, right? and I will just look at the angle that this thing is coming down at. And I will say to myself, where are the probable areas we're going to get a pullback? Where can we anticipate once this breaks the high point might be, right? I don't really know if I want to be interested in this trade if it breaks past this last pivot, right? We have a swing low, a pivot, swing low, a pivot, swing low, a pivot. So I don't really want to maintain a bearish ideology if it breaks past all these swings easily. So I'm going to look for confluence to the downside, and I'm going to use this as my ultimate stop. Okay. So as we start to get a breakout, it's moving into this, and we get a really nice sell structure here. I'm not going to ignore something like this. Sometimes you get real tight continuations. I would probably take this trade, not going to lie, and I'll put my stop up here, right? And now what are we going to do? We're obviously going to target the downside down here, but we're also going to look for the gap fills, right? So because this is a great risk reward. So here is where the strategy becomes so effective. We are allowed to size in given certain situations. So it immediately comes up and we're in drawdown, and that's fine. I am going to be looking for interactions with these, right? Because we have a low. So if it interacts with that and shows me selling pressure, then that's great. So we get a really erratic candle on the 1 minute, right? Pre-market opened, and then what do we get? We get a wick, and a red fall through. So now we can add exactly where we were before, and we have a much better risk to reward. Because now we're going to risk the top of these wicks, and I'm going to risk the top of these wicks with this trade. So now we're most likely not risking anything more than 1%, and we still have all of our underlying targets. Where was the peak? The peak was here, right? Where's the order block in this peak? It's right here. Where's the bottom of the peak, right? Just say here, right? And then where are the gaps? So as price comes down into this, we can take some profits off the board if we want. As it moves down into this, we can take more profits off. But I probably would not do that because, again, you have to react to the market. And this didn't crawl down into our TPs. It flushed super hard, right? In 1 minute, right after we entered, it immediately hit our first TP. There's not really any reason to take profits here because it's so obviously going for the break. So instinctually, what am I going to do is I'm going to take profits off here. I'm probably going to take half my position off, and I'm just moving my stop to break even, and that's fine, right? Or at the very least behind these bodies. So now our risk reward is starting to improve, right? And now we're going for that gap, that Hail Mary play. And now what do these risk rewards look like? A 7.25 to 1 and a 7.6 to 1. Let's find another trade on GBP/JPY. Same shit over and over and over again every single day. And this thing is sold off incredibly hard. Wow. Okay, this is a trade I lost. This is a trade I won. So what do we have? Right, I do not anticipate areas like this are going to be good for bounces. Why? Because there's so much wick underneath, and the market loves to fill these gaps. So what did it move into? I had a 1 hour support marked out here before. We'll just keep that. Right, we have an order block right here on the hour that this reacted out off of. So where are we when we wake up in the morning? Right, 8 a.m. It starts pushing. It starts pushing, and it looks like it wants to take out these lows. If it takes out these lows, where's the gap? The gap is here. The gap is here. Right? We have these candles down here. Right? We have these candles down here. So that's something I'm very interested in trading. So how do we do that? Same shit every day. I'm going to go to 1 minute. I'm going to look for a break of structure on the downside, and I'm just going to anticipate that we get some kind of continuation. So where was the first break? The first break was here. I'm anticipating a continuation. Okay. Right, and it happened at 8 a.m. So around here. So we have rundown. It came up at pre-market open. I hate when that shit happens, but it happens. All right, and now we're just getting a rundown. On the 1 hour, we already know what it looks like, so we just want to wait for a retracement. And we have the top of the move here, and we have the bottom of the move, obviously, here. So we don't want to draw out a trend line like this, because this screws that up. No, instead what we want to do is we want to look for the advanced move, the super aggressive move down, and we want to base it off this. Obvious reason, we want to make sure that it doesn't break above this. Obvious, right? Because it has such an aggressive order block printed right here. So as our fail-safe, this is going to be where we no longer find any interest in this position. However, I am looking for confluences once it starts moving into these areas. Why? Because we had a breakdown, a continuation, an order block formed. So these wicks are a little bit of a gap. I can anticipate something might react out of this. And what happens? It finds ground and it aggressively moves up, probably spooking a lot of people. But it immediately rejects this area, it rejects it again. So I would immediately take a position here and just put my stop above this, targeting the downside. If I get a better entry off this candle, I will probably take it. And as you can see, it moved right back up and started to print down again. So I might even, as this breaks down again, add to this position, right? And now put my stops here. So this gives us a really good risk reward right off the bat. This is the same shit every single day. So where are our TPs going to be? Obviously, we have the order block here. So we have TP1. We have to anticipate a double bottom. So here we have TP2, right? And then we have our gap down here below. So now we're in a trade that might make us 6 to 1, 6 to 1. So what happens is it comes down, right? It hits our TP1. We take off maybe 25, 35% of this position, right? It aggressively moves up. We move our stop to break even because we don't want to take losses. That's not what this game is about. You don't take partials and then leave yourself open to lose that money. If you're going to take partials, you move your stop to break even. You know, you live to fight another day. We get 2 confluence candles. Now I know that this level here is going to break. It's moving too fast into this area for me really to think it's just going to button hook and then go up. So at this point, what am I going to do? I'm just going to move my stops to break even. I already took profits, stops to break even. I don't have to worry about anything anymore. I might as well just target the lower gap. So as it comes in and breaks this, I might take off another quarter of my position just because I like my money, and then wait for it to come in and fill that gap, which it does. And then it fills the next gap, right? And then we get a really, really great reversal. And today I am going to talk about reversals and how to spot them. It is the same thing that you see all the time. It is a 3-line strike, 1, 2, 3. Right? We have an aggressive move down. We have an attempt, a shittier attempt, a decently good attempt, okay? And that 3-line strike, now we've created what is called a liquidity pull. It's a lot like the ICT strategy. So buyers, they're reacting to something. They're reacting because buying volume is probably somewhere down here. And what happens is we get this final pull down, and then we get a V-shaped correction. The reason the V-shaped correction is so ideal is because what that's showing you is that it's starting to form an inverse head and shoulders. If you see a V-shaped correction like this, where you have attempts, and then it drops pretty aggressively and then also corrects immediately after aggressively, that is a great reversal pattern. And it is a head and shoulders or an inverse head and shoulders. right? It's making an attempt to break these highs, and it's very obviously pulling in, reacting, pulling deeper, or reacting even more. So this is as much confluence as you can get. Anytime I see something like this, whenever price starts to pull back, as soon as I see any confluence at all, I will aggressively add. There's no reason not to add, because your stops are always going to be the same place. They're going to be underneath this. And you're always going to have a good risk to reward on these. Right? And then what happens, you get these double green bars here. And all we need to do now is wait for price to pull back a little bit more, and we can add. So it pulls back a little bit more, and it prints this nice little thing right here. So what can we do? We have a position here, and now we can add a position here. All right, we can move all our stops up to here, so we're already in profit no matter what. And then we want to target the beginning of the move. Where was the obvious beginning of this move, right? We had a lot to here, but this was the big swing that happened. So what we're going to do is we're going to target the top of the swing and just wait for that reversal to play out, which it did, and it played out pretty fast. It played out, and let's actually mark this out and see what happens. So we entered here, and we hit our profit target. We'll say we probably got out around here, so in an hour. And what's the risk reward on these? A 5 to 1 and a 9 to 1. Alright guys, that's all for today's recap. If you liked the video, please like and subscribe, and I'll see you on the next one.